Good afternoon, traders and investors. Will back here with another one. Hope everybody had a very beautiful long weekend. And in today's video, guys, it's that time of the week where we go over the top 5 options plays for the upcoming week. This week is a little bit of a short week, however, so we only have 4 trading days. So all of these options plays, guys, we're going to have to be very diligent on our entries tomorrow morning on Tuesday, because thereafter the time decay on options is going to be quite quick. So with that being said, guys, this video is going to be all about selling put options, more specifically, as part of the larger put wheel strategy. If you don't know what selling put options entails, it's a very easy strategy, guys, whether you're a beginner, intermediate, or even advanced investor. Just think of it as writing limit orders that pay you, right? So let's say you want to pick up some shares of Amazon. Let's say you want to pick them up at the 177.50 level, and you're unsure if it's going to get there by this Friday or not. That is why we sell put options. So if you take a look at the Amazon contracts right here, you will see that if we were to write the 177.50 puts on Amazon, we would collect about $71. Now, if it doesn't get all the way down below there by the Friday close, you just keep the $71. If it does get there and you get assigned, guys, well, you have to buy 100 shares of Amazon at the strike price. And then we are going to write covered calls on the position the week after and get even more juicy premium. So essentially all we're doing is farming premium in the markets right now. Very, very, very easy strategy. So in today's video, guys, we're going to go over a few of the strategy rules. And then we're going to take a look at last week's top 5 options plays, see how those did, and take a look at this week's top 5 options inclusively at the end of the video. And I also have a little bit of an earnings play for some call options for those of you who are interested. We'll take a look at that at the very tail end of the video as well. So without further ado, guys, let's get right into today's video. Now, where we stand, a little bit of context, right? So we've obviously had a very beautiful rally in the markets. However, we do have a couple little events this week. We have a bunch of Fed members speaking. Then we have GDP reports coming out on the Thursday session. If those are ever negative or worse than expected, expect the markets to take a little bit of a tumble. And then we also have a PCE, personal consumption expenditures report. That is an inflation report coming in on Friday. And if that one is worse than expected as well, we could expect a little bit of a decline. So all in all, guys, the markets are still very, very bullish, but we are keeping an eye eventually for that weekly higher low to be set. So the markets could have a little bit of corrective action here coming in the forthcoming weeks, but nothing too severe in my opinion. The markets are still very bullish, so this strategy should still work very perfectly. Now, in terms of the strategy rules here, guys, let's jump into a few of the rules. And if you haven't seen my longer form video where I tackle all of these strategy rules in detail, I'll leave it in the top right corner of the video right now and also down in the description. It's about a 35-minute video where I go through all of these rules in depth and also show you guys how I pick my stocks, how I pick the strike prices, and all that good stuff. So definitely check it out if you haven't yet. Now, let's go over a quick, brief recap of these rules. So number 1, to be writing puts, guys, this is the most important rule in the book. Always write puts on a solid company. Never write any puts on a company you do not want to own. It is really rule number 1, because if you get assigned a stock you do not want to be in, managing the position will be a bit of an emotional roller coaster. So let's just take that off the table and only ever write options on stocks you want to own. Number 2, we want to be writing stocks that are in a monthly uptrend or at least a long-term range. That betters our probabilities if ever we are assigned the shares of the stock that our long-term bulls are in our backs, right? So we always want to be doing something in a monthly uptrend or at least a long-term range. Try to avoid the longer-term monthly downtrends. Now, number 3, want to be writing puts on stocks that do not have earnings this week. Earnings are a very, very volatile event. And even though you may see me do it, it's not saying that, I can perfectly trade in and out of these things. They are very volatile and very dangerous events. And if you just want to stay a very safe trader and really just milk this strategy for all it's worth, just stay away from any stocks that have earnings this week. Mostly, guys, if you're not an experienced trader, it is just not worth it in my opinion. Now, number 4, we want to be writing stocks at an area of support or at least a breakout retest area. And the example that I always bring up is Autodesk. So Autodesk, an area that we're looking to write stock at support, right, would be targeting the lower end of this range right here. The breakout retest trade is somewhat opposite, right? So you're waiting for a breakout of a range and then a retest of the top end of the range as support before a further breakout. This little retest area right here, usually a very high probability trade when you have the higher time frames breaking out. So those are just a few of the structures that we like to follow on the channel. All of the plays that you're going to see on the channel so far are going to be plays that are in a big area of support or an area of breakout retest. Number 5 and number 6, these are going to be hand in hand. So the stocks always have what we call an expected move. You can see, guys, for the week here, let's say we pull up Fortinet stock. If you don't know what the expected move for a stock is, just go to optionsai.com. It's a free tool that gives you the expected move. Now, for Fortinet, let's say it gives us the expected move to the upside and to the downside. So to the downside, it's about 59.81. So what we want to do is we want to be writing puts at or lower than the expected move, guys. It just improves our probabilities of not being assigned. The expected move is a probability that Wall Street gives to a direction of the stock in a given week. And if we're always trying to write at or lower than the expected move, guys, usually that is the zone where the stock gets a little bit of a bounce and brings us back into the expected move, right? So that's why we always do that. Couple that with always writing on red or flat days, guys. Never chase stocks to the upside. We always want to be writing on red or flat days. Why? Well, because, for example, if Fortinet has a very red day on a Tuesday, bringing us down to this expected move, we can write even lower, right? So if the expected move is 59.81, we want to be writing below that. If Fortinet tumbles on a Monday or Tuesday morning, well, within this range right here, close to the expected move, we can then write even further below that entry, which is going to really give us the best probabilities of not being assigned. Now, rule number 7, we want to be writing between 0.5% and 1% in weekly premium. This is a bit of an art form in options, guys, and after the last 5-6 years of trading this strategy profitably, this is the zone where I find that you have the best risk to reward and also the best ROI, right? So obviously, when we write these puts, it's going to cost us some upfront capital. That's why they're called cash secured puts. Now, if we're writing at 0.5%, guys, essentially what it means is you're looking for half of the strike price in cent increments, right? So if we want to be writing the 175s right here, let's say on Amazon, well, you need to be finding at least half of this strike price in cent increments. So just do 175 divided by 2. You should be seeing 87.5 cents on the bid for it to be worth it for you, right? Over 1% is bad. As you can see here, guys, right? The 182.50s on Amazon are paying well over 1%, right? 1% would be $1.80. These are paying $2.85. But the problem when you get too much premium, guys, is that usually it's too close to the stock's current price. As a matter of fact, on Amazon, that is actually above the current traded price. Now, Amazon has low volatility. This will not always be the case. Sometimes you'll see the 1% or over 1%, one strike below the current price. It's just too close, guys, right? So that's why we always stay between the 0.5% to 1% rule. It really gives us the best chance of 1, not being assigned, and 2, still making decent money while being in the trade. And now lastly, we want to take profit at 90% of the contract value. That's pretty much self-evident. Since this strategy is so passive and only really requires you to set up your trades on the Monday or Tuesday morning and then just let the time decay do the rest, well, just set a take profit at 90% of the contract value. So if you're not in front of your computer screen Wednesday, Thursday, or Friday, at least the trades can automatically take profit. And then, if ever we're assigned, despite respecting all these rules, if we get assigned a stock and then we have the shares wanting to write covered calls, the covered call rules, guys, are super simple. Same thing for covered calls. Just look for 0.5% to 1% in weekly premium. And we want to be writing at the assigned strike or one strike higher. So if you get assigned, let's say on Amazon at the 177.50 level right here, the following week, you should be writing covered calls at 177.50. But if on a Monday or Tuesday session, before you write those covered calls, Amazon jumps up right here, well, then you can feel free to write one strike higher around the 180 mark. That is still a very decent trade, in my opinion. Just don't get too greedy with your covered calls, writing way too far above, guys, right? We're in the business of making premium. We're not in the business of speculating how high a stock can go in a given week. So always be sure to take your premium first, guys. If you see it, then place the trade and just let the market do the rest. As long as you're making your 0.5% to 1% per week, that is fantastic, guys. If you're always making 0.5% every single week throughout the entire year, then your account should be up anywhere between 20 to 26%, depending on your trades in a given year. And that's usually 2 times and a half the average performance of the S&P 500 while still staying very conservative. So that is pretty much everything that I had for you guys in terms of the rules. Now, a few of the themes to go over here, guys. Take a screenshot of this. These are usually the themes that I will be going for in all of the trades. We're going to try to avoid the ones that are tough to trade right now and really focus all of our plays on the ones that Wall Street is in favor of right now, right? Don't try to swim against the market. Try to swim always with the market. There will be a time for these sectors to come back, but it is just not there yet. So with all that out of the way, guys, let's jump right into our top 5 plays of last week. And the first one we were looking at was Palantir. So Palantir, we'd been highlighting Palantir for this beautiful area of $21 all the way down to about $20.50, and we were targeting last week exactly that range. $21 all the way down to $20.50. Now, the $20.50s did open up earlier in the week, guys, so you can see the Monday and Tuesday session right here, we came right down into the $21.25 area. At that point, it did free up about 10-11 cents on the bids of the 20.5s, so congratulations to anybody who was able to get into that trade themselves. I, for one, did not get into this trade because I already have some Palantir shares a bit higher, so I was writing covered calls during this time. But for anybody who would have entered that trade on Palantir, either the 21, which was a bit aggressive, or the 20.5 that we were seeing on the channel, well, you would have pretty much ended up with a 100% profit, as Palantir did close above $21. So congratulations to everybody out there that took that trade. Now, second one was AMD, and AMD was one that I took myself. We were looking for pretty much anything under the expected move last week, which was about 156. So I was highlighting the 155 strike as a very juicy area for entry. And as a matter of fact, I did take that in my own account. We were even showcasing it on the channel a lot over the course of last week. You can see that I opened this one on the Tuesday session, AMD 155s, and we got about 67 cents for them. Didn't get quite 0.5%, but it was still fairly juicy, right? So on the Monday and Tuesday session, the stock was coming down right into the 163. That opened up the 155s. I took them right here, and congratulations to anybody who would have taken the 155s, 156s. You would have ended up pretty much with a 100% profit in your pocket with that premium. So looking very good on AMD as well. Now, the third trade we were looking at was Airbnb. And Airbnb was a little bit of a tricky one here, guys, because the volatility wasn't too high. We were looking for Airbnb. The expected move last week was about 141. So we were really looking for 140 and 139. Now, unfortunately, even on the Tuesday session, guys, it got down to about 144, but it didn't really free up the 140s that we wanted specifically. So I, for one, did not take this trade last week on Airbnb. The idea was good, but the move really started happening Wednesday and Thursday. And at that point, guys, there's just too few days left in the trading week to take a trade down here to give you good premium. So I avoided this one. Now, once again, the idea was good. It just didn't move quickly enough in our direction on the Monday or Tuesday session to take this trade. But still, the stock ending around 144 in that week. Now, the fourth trade we were looking at, guys, was Uber. So Uber as well, kind of like Airbnb. We were looking for Uber pretty much anywhere in the 63 to 62 range. The expected move was about 63.20, if I recall correctly. But unfortunately, guys, the market really didn't give us much entry opportunity. You can see here on the Monday and Tuesday session, it came down into 63, and we wanted as close as possible to 62 and 61. The premium just wasn't there on Uber. Uber also doesn't have that much volatility as of recently, right? So we really needed a heck of a drop here down into the 62 range, which would have freed up the 61, maybe even the 60 puts. And that's the zone we were looking at, closer to my big box of support down here, this green line, which is about 60.5 all the way down to 55, right? So I did not take this one directly. You could have taken this one if you were a little bit more of an aggressive trader. The 62s were open, but no more than that. You couldn't really find much premium on the 61s or the 60s. So I just decided to not take this trade since I didn't get the lower levels that I really wanted to. But all in all, even if you would have taken a little bit more of an aggressive trade, the 62s or the 63s, they would have been profitable, guys. The stock ending above $64 by Friday. And the last one we were looking at, guys, was Amazon at the 180 range, right? So we were talking about Amazon at the time we were filming the video. Amazon was about the 140, the 184 level, and we were really watching for a pullback into the 180 zone. So looking for either the 180s or the 177.50s. Well, the 180s the 177.50s never truly freed up, but we did get a nice chance at the 180s, guys. And I actually took these ones myself. You can see that I did write these on the Monday session. I showcased the position on the channel when we went through my portfolio. I wrote the 180 puts for about 70 cents. Now, the 0.5% rule would have said about 90 cents, but it just wasn't there yet. However, Amazon, as I was saying in last week's video, Amazon's premium is usually a bit conservative, guys. It doesn't move as fast as Nvidia, right? So I was fairly happy to get 70 cents on a more conservative stock, on a more blue chip stock. So that is what I went for. You can see that right here. It was down there on Monday, but if you would have waited for the Tuesday session, you would have gotten even more premium than me. So this Tuesday session dropped at least down into the 180 range. That would have freed up the 180 puts, would have been a little bit close at that situation. The 177.50s at that point in time, guys, didn't offer that much more premium. They were only offering about 50 cents, 55 cents in premium. So you could have went with that one if you're a little bit more conservative, or the 180s. Either one of those strikes would have paid decently, guys, because the stock did above 180. So all in all, guys, all the trades of last week were very good trades. None of them would have ended up being assigned, and there was just a few of them that didn't present us enough premium to go and get, such as Airbnb and Uber. But for the rest, guys, was a fairly decent week in trading, so quite happy with the way last week's plays went. Now, in terms of this week's plays, guys, very, very simple. There's going to be a few that are recurring because they're still within our zones that we want to attack them in, still in very nice support zones. So the first play, guys, is going to be Palantir once again. I've been featuring Palantir on this channel now for about approximately the past month at this point, always within the same range, and we've been making some very, very decent profit on it. So let's continue. On Palantir, the expected move for the week is about 20.4. So we want to be riding below 20.4. So we're going to be targeting $20 and even potentially $19.50 if we can get that low. So Palantir, same trade as usual, guys. Gorgeous monthly uptrend right now, looking for the monthly higher low. Beautiful support down here. The monthly 12 EMA is right down here at about $19, and you also have the 50 EMA on the weekly, also at about $19. So that is really the maximum location before the bears, before the bulls, I do believe, will put in a heck of a bounce for this stock. So we will continue playing it in this lower range right here. Huge prior support, big resistance, and now is acting as support once again. So Palantir, let's go see if there's any premium offered on this chain right here, $20 or at least the 1950s. Let's go have a look together, shall we? So pulling up Palantir right now, where is it? All right, let's view the options chain for this Friday. And as I said, guys, it's a shortened trading week. So if you get a little bit of dip tomorrow on Tuesday morning, make sure to be quite quick on these because the premium will run away from them if you wait too long. Now, let's take a look at the 1950s here, guys. So you can see the $20, there's almost nothing. What we need to see is at least 10 cents, 0.5%, right? Even on the 1950s, you want to see about 9-10 cents. Unfortunately, it is just not there yet. It is there at the 20.5s, but 20.5 is relatively above the expected move. So the key here is if we get a little bit of a dip here on the Monday morning session, if we pull back down into the expected move, 20.4, 20.3, all the way down to about the $20, that could open up the 1950 strike, which is my preferred strike. But even the 20s, guys, I would not be so opposed to doing that. It is roughly about, let's call it about 4% away from current share price, right? 21 all the way down to roughly $20. That would be about 4.5%. So even the 20s are not that bad right now, but we still would need a little bit of a drop to get a little bit more premium. So I'm going to be looking for the 19.5s or the 20s, as low as we can get while still getting decent premium here, guys, right? So let's target those two trades for Palantir over the upcoming week, 20 or 19.5, depending on the size of the drop. Obviously, if Palantir opens minus 4.5% tomorrow and opens right at $20, well, we're not going to write the $20 strike, right? We have to go lower. That's why I say as low as we can go, depending on the move of Palantir on the Tuesday morning session. Now, moving into our second stock, AMD. AMD is going to come up again. Why? Because I really do believe AMD is currently playing catch up with the rest of the semiconductor trade. They are really beaten down bad, especially in relation to a lot of other semiconductor plays. So this could be a nice sympathy play if in the event that stocks like TSM, Applied Materials, stocks like NVIDIA, of course, right? If they keep running, SMCI, ARM, if they keep running, then AMD will likely benefit from a run as well. Now, AMD is also in the process of trying to find its monthly higher low in this lower region right here, and we're probably in the process of finding it right now. So if ever we get a little bit more of a dip on AMD right here, could be a beautiful opportunity, guys, to pick some lows and just wait for your bulls to start regaining some of that longer term control. That being said, the expected move for AMD right now is about 161 on the week, guys. So 160.65-ish. So let's see if we can get some premium, guys. I would really like to find some premium in the mid 150s for AMD. I think it's a very safe location with our previous bottom end of support down here. So let's target the 155s. If we can get around 156, 155, that would be a gorgeous contract to write this week, in my opinion. And I will be going for those myself. Now let's check the AMD premiums and see what's available at that strike. So AMD, guys, you can see right now, there's not much on the 155s, right? It's a bit far away. Even the 157.50s, there's not much. Where is the 0.5%? At 160. Well, luckily enough for us, the 160 is below the expected move, but it's relatively tight. The best case scenario for AMD is if we get a little bit of a dip on Monday morning. Let's say we come down 166, 165, 164 in this region right here on the Monday morning. That will most likely free up a lower strike for us. Maybe the 157.50s, maybe even the 155s. So those are the two strikes that I'm going to be looking at specifically. So an aggressive trader can write the 160s and there will be no harm. But if you really want to be conservative and get the best possible location for this trade, I really do believe, guys, that is under the close of the Thursday candle or under the lows of the Thursday candle. Going to be very tough for the bears to revisit that area. So if possible, guys, 157.50 is my favorite strike on this stock. But once again, as I said, it's going to require a little bit of a drop on the Tuesday or even Wednesday session to really free up that premium. So those are the locations that I'm going to be going for on AMD specifically. Now, this third stock that we're going to take a look at, guys, is going to be one that was featured on last week's video as well. Amazon. Amazon is currently in a nice daily downtrend, right? What are they trying to do? Just trying to set up for the weekly higher low for that further trend continuation. And we're coming up into a very juicy area of support, guys. This the higher 170 range, big previous all-time high resistance could be a great location for the bulls to set up for a higher low for that eventual weekly trend continuation. So that is why I'm a big fan of playing this little micro dip on Amazon that we're having right now. So the expected move on Amazon for the week is 177.15. So let's take a look. Can we find anything in or around the expected move on Amazon for next week around the 177.50? So if we take a look at Amazon here, guys, you'll notice one thing about Amazon. Sorry, let me just pull it up on screen right now. It doesn't have options on every dollar increment. You can see that they're $2.50 apart, right? So you either get the 180s or the 177.50s. Now, Amazon, I will make an exception for Amazon just because it's such a solid stock. So the expected move on Amazon right now is 177.15. I would not be opposed to writing the 177.50s. And as a matter of fact, we're already getting almost 0.5%, guys. You would need to see about 85, 90 cents on the bid right here to respect the 0.5% rule. But as I was saying in last week's video too, this one can be a little bit more of a conservative play. Even if you don't see the true 0.5% rule, it's okay. I would still be fine with taking Amazon at this level for about 71 cents, even if it doesn't directly respect our 0.5% rule, just because I would love to be assigned some Amazon shares over here. And I do think the premium, considering the fact the stock doesn't move so much, the premium is quite juicy. However, if Amazon continues its slide into tomorrow, guys, if the Amazon breaks down 180, 179, then definitely you will find the required premium on this strike right here. So just watch for any and all dips on Amazon. And by a matter of fact, if Amazon opens 2% to the negative tomorrow, let's say Amazon, for some which reason, if the markets open very red tomorrow and they go down 2% down into the 176 range, it may even free up the 175. So I'll be looking for these two strikes on Amazon this week, 177.50 or 175, as low as we can go while still getting somewhat decent premium on the stock. Now, the fourth stock we're going to be looking at here, guys, is going to be Square. So Square, the reason I like Square is that even though we're in a massive down spiral, right, from the all-time highs, it's been in a relative nice range for relatively the past year and a half, during which they've really honed in on the cost control for the company. And now the stock is indeed profitable for the first time in its history. So all that together, coupled with the fact, guys, that the valuation right now, we did the valuation after earnings at $75, only a 0.55 peg. As a matter of fact, now 10% lower. This should be closer to a 0.5 peg. That is very, very juicy. Tremendous EPS expansion as well. So the fundamentals of the company are really turning around. One of my favorite fintech plays right now. We're currently in a nice area of support. The bottom end of the support, guys, is all the way, we can call it 63 to about $60. So the expected move on Square right now, we're going to try to make a play on these lows here, guys, right? The expected move for the week is about 64.10. So let's see if we can find any premium below $64 for Square in this given week. So let's pull it up real quick together. So let's pull up Square, and we're gonna go shopping $64 and less in terms of our strikes. So we can see right here, guys, where's the 0.5% rule? Well, we're getting 43 cents for 64. That is not bad. We're even getting 30 cents for the 63s. That is almost 0.5%. So the strikes that I'm looking for here, guys, is as low as possible, right? So 63, 62, those are gonna be my desired strikes for the week, depending how Square opens. If Square opens red tomorrow morning, once again, let's say we open in the 65, even 64, $50 range, well then, guys, that is definitely going to free up the 63s or the 62 strikes, maybe even the 61, depending on the size of the pullback. So these three strikes are going to be the ones that I'm going for. Look for about 30 cents on the bid, and that should be more than sufficient for Square. Even if we come into, 63 would be a great strike. That would be a 5% cushion that we have, guys, before potentially being assigned. And if we are assigned, I do believe that we're really getting to the bottom end of this level of support. I do believe the bulls will make a nice little bounce for us when we come down there, especially if the rest of the markets, guys, continue pushing all-time highs and we continue getting very healthy rotation. So keep an eye out on that one for Square. And now for our fifth stock, guys, well, this one's going to be, I'm going to give you guys a few options here, right? Just because the first four that I gave are my highest conviction plays. Now the rest, although they're very decent plays, we need to wait for which one is the best, okay? So out of the 3-4 plays that I'm about to give you, we're gonna look for which one provides the best opportunity using the rules that we gave prior on the channel, right? So the first one we're gonna be looking at is Alibaba. So Alibaba had a nice little breakout on the weekly, right? Beautiful weekly breakout, looking for the weekly higher low to eventually maybe get a weekly uptrend going. We're above our moving averages, and you can see it best on the daily. We did a great job of breaking out of this entire region of resistance, and now we're coming back and retesting it. So this is the infamous breakout, retest trade, and potentially run. That's why I'm very interested in Alibaba around this location right here. The expected move on Baba for the week is about 78.64. So let's see if we can find any premium on Alibaba below 78.64, and you'll see that Alibaba usually does have some pretty juicy premium because the stock is fairly volatile. So $78 right now, paying about 31 cents. If Alibaba continues dropping on the Monday morning, that should free up the 78 strike directly, maybe even the 77s. So 78, 77, those are going to be the ones that I'm looking for Alibaba. It is exactly the top end of all of these candles, so it should be a great location for the bulls to defend. And on top of that, we got all our moving averages, the longer term ones. The 200 is right here at about 79, and the 50 is right here at about 78.50. So looking very good on Alibaba. But by all means, guys, this is not a favorable trade. You remember I showed you the list of favorable trades that we had in the markets right now. The themes, right? China is a tough one to trade. So by all means, if you don't like Alibaba, please just do not take this trade at all. The other one we're going to look at, guys, is Airbnb. Airbnb, I'm not going to go through the options with all of them, guys. I just want to give the plays, right? So Baba was the first one. Airbnb is the second one. Airbnb, the expected move for the week is about 140, 140. So I would want to find 140 or 139 if I can on Airbnb. This is why, guys, we're going to look which of these stocks has the biggest drop on the Tuesday or Wednesday session, and that is the one that I'm going to look at. Another one that's up for consideration, guys, is Fortinet, one of my favorite cybersecurity plays. The expected move for the week is about 59.81. I would love to get the $58 puts. There's just not that much premium on there right now, so we would really need to see a heck of a drop on Monday morning to open up the 58 puts, and the 58 puts are getting very, very close to my huge area of support, where I do believe that could be the maximum drawdown location, maybe into the 55. So even if we do get a sign here at 58, I don't believe there's much downside left for this stock. Now, the other one that we're going to be looking at, guys, is, a few of them right now that I have pulled up is AbbVie. So AbbVie trading around 157.06 right now. I don't have the expected move, but AbbVie's premium is not the best. One thing's for sure, though, if we get a big move down here into the 154 all the way to 152, that's going to be the location that I'm looking out for on AbbVie, at least for the next week or two. The only problem with this stock is that since it doesn't move that aggressively most of the time, the premium on the contract is not that that good. So you really need a big move down to open up some of these lower strikes. And another one that I'm going to give to you guys for this week and maybe the next coming weeks is UPS. UPS, same thing as AbbVie, right? You don't really get much premium unless you have a big drop. UPS, I'd love to find some puts down here, short puts around the 135, 134 location, but at 138, we're just a little bit too far. So if it comes down here, 137, 136, it may open up the 134, 135s for UPS. Could be a great entry location for this trade. Really the lowest end the stock has been in pretty much in the last 2, 3, almost 4 years of trading at this point. And the company is doing still amazing. And the last play I'm going to leave you guys with is Monster Beverage. Monster Beverage also quickly approaching one of my very best areas of support right now. Coming into it, right, 52.70. I would love if I can get Monster around the $50 strike. The problem is, guys, is this one just doesn't move too much. So this one is another one that's kind of on the back burner. All of these trades, guys, Alibaba, Airbnb, Fortinet, AbbVie, UPS, and even Monster. These are the ones that I keep on the back burner. They're coming into areas of support, but they're just not juicy enough yet. We need to see if I pull up my list tomorrow and I see minus 3-4% on one of those stocks, though that is the time that I'm going to go shopping for some put options. So these are just a few ideas that I figure I should give to you guys just for some ideas and some examples of what to look for when you're trying to trade the stocks or when you're trying to look for juicy opportunities to write some put options, okay? So those are pretty much all the put option plays that we have for this week. Now, I'm going to give you guys one long call earnings play, but before I do this, guys, very big disclaimer. You guys know the drill, right? Call options, whenever we're buying options, you can lose all your money, guys. So be very careful with this. None of this is financial advice. You will probably lose all your money trading call options every now and then. You can find some winners, of course, but just be wary that it is a losing endeavor for most people most of the time, right? There's a little bit of a disclaimer there just because I don't want anybody to say, Will, I lost all my money on this one type of thing. You know what I mean? So that being said, I am playing CRM both ways. I wrote some short puts here on the Friday session. I wrote short puts for earnings at around the 255 level, right? Right down here, right into previous support. That is the short put play. I am taking a gamble on it before earnings because this company is doing amazingly well and I've been waiting for a pullback on it for a while. The PEG ratio at 300 was only 1.25, so now it should be even lower than that. I do think there's good value on this stock. Now, I did take one long call option on it as well for earnings specifically. Now, which one did I take, guys? I will tell you right away. We went with the June 28th. So let me pull it up here. I do have one call option. I wish I had my account up, but I showed it on the Friday video anyways, right? So if you just want to see the position, it's on Friday's video, and I'll probably show it in tomorrow's video with my positions as well. But we went with the June 28th, so 1 month away. We went with the 295 call options. We got the midpoint here. I think if I'm not mistaken, guys, I think I got about 385 or 390 for it. If you go back into Friday's video, you'll probably see my exact price that I got for it. But that is what I'm looking for here, guys. 1 month's worth of time, but be sure, I'll be very clear, guys. If CRM does very, very well after earnings, and let's say they come up into the 290, 295 range, I will probably be selling this option over the course of the week. I'm not going to stay too long into it, not going to wait, 1, 2, 3 weeks for it to do something like this. If we get a nice pop after earnings, I may wait the day after earnings or maybe 1 day more. If it comes up to around 290, 295, right into my strike price, I will be selling the option for a profit, just a little quick gamble for earnings, just because I'm very bullish on the company. So do with that information what you will. As I said before, I am playing the 255 strike for short puts, got some decent premium for that. And we are also making a long call play the June 28th for the 295 strike. So that is my earnings play on CRM, of course. Very, very bullish leaning play. So hopefully you guys enjoyed the video. That's pretty much everything that I had for you guys. If you did like it, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel, guys. We do these top 5 options videos every Sunday night or Monday night, whenever the market is going to open the next day. So we always do those videos to wrap up the weekend. And then we do the daily market recaps Monday through Friday as well after the close. And as usual, guys, if any questions whatsoever on the strategy, on the plays, some options plays that you're considering, please feel free to leave them down below in the comments and I'll be sure to answer you within the first 24 hours. So take care, guys. Happy trading. I will see you tomorrow after the close. Peace.